contractually guaranteed. As long as you make your premium payments, the insurance contract will grow over your entirety of your life.
Welcome to the Freedom Point Real Estate Podcast, where we talk about creating more time freedom through passive real estate investing. Passive investing in real estate challenges conventional investment wisdom. We are passionate about learning and sharing resources with others who are ready to transform their investing mindset. Quick disclaimer as always, I am not a CPA, I am not an attorney or a financial advisor. This is not financial advice, not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer, ADP. I'm glad you're here. Now let's dig in.
All right, welcome back, Freedom Point Podcast listeners. Thank you again for jumping into another episode of the Freedom Point. Really appreciate you being here today. Really appreciate all the great, wonderful feedback that we're getting from our listening audience that continues to express their thanks for the different guests that we're bringing on. I do have another amazing guest with me today, Dom Rufran. Dom, welcome to the show.
Thank you for having me. It's a true pleasure. I'm excited. I'm really excited.
Yeah, absolutely. And likewise, I'm really looking forward to, talking with you today about something that I would say, I have a limited knowledge in related to whole term life insurance. So definitely interested in kind of chopping that up with you there. But to give my listeners a little bit of a background on Dom, Dom is a former Division I and professional football player who now runs and operates a financial firm that specializes in helping business owners and real estate investors increase wealth efficiency. That said, Dom, maybe you can kind of tell us a little bit more about, maybe your time even as a professional football player. That sounds exciting. How you, got involved in real estate and how you ended up deciding one day you were going to start up a financial firm.
I love it. Yeah. So I grew up in a very poor atmosphere. So food stamps, trailer park, welfare. And through that, I saw what it was like to struggle from a standpoint of no financial means compared to what other people, quote unquote, had. And so I always told myself that I want to do whatever I can to get out of this cycle of not having money from a generational standpoint. And so my ticket out was football. I thought about football. I obsessed over football. It was like the true first time in my life where like something felt like it was me and it was my identity. I slept with my football. Even when I was in college, people asked like, "Hey, what'd you get your degree in?" And I'm like, "Well, I got it in football with the major, minored in business." It just was something that was constantly something that I was obsessed with, and through that, got a Division I scholarship at the University of Wyoming, and then in 2015. I got picked up by the Atlanta Falcons, and 2015 was the time that I spent there. And then when I was done, I kind of went through this interesting transition in life where I had my identity in football, but it kind of got ripped away because I ended up getting cut. I got injured during the time that I was there, and trying to just figure out this is what I wanted, it kind of just slowly got ripped away, and I eventually fell out of love with it. And when it was ripped from me, I then had to find a new identity that could replace that void. And I got through a place of like depression and trying to figure out who I was. And I actually started a podcast a couple of years ago that was called The Game Goes On. And what I would do is I'd interview higher level athletes and how they transition from professional athletics to the business world. And I did about 30 episodes. And then after that, I decided to kind of put that on side, found a little bit more of my mojo with what I want to do with my life afterwards. And I just went all in on finance. And so through that, I chased a little shiny object syndromes, found a bunch of shiny things that sounded good. And through that, I ended up finding the company that I'm with now. It's Better Wealth, and all the things that you said is right. I found my business partner a couple of years ago, 4 years ago. We decided to partner together and build something massive. And we always coin is let's go build the Facebook of finance. And so we've been in business now for 7 years, 7-figure company, really enjoying it. And along the way, I got plugged into real estate, knowing that it's an incredible asset class. appreciation, depreciation, cash flow, tax advantages. And when you start looking at efficiencies, it's one of the greatest asset classes on the planet. And a lot of our clients come to us because they just have that mindset of being their greatest asset and they want ways to control money. I think as a real estate investor, you know how important it is to have liquid capital and to control funds and need it when opportunities present itself. So that's what we decided to do is we decided to really go deep into a product that allowed real estate investors and business owners and really value creators in general to have a store of capital to be able to borrow against and use when the opportunities present itself.
Yeah, absolutely, Dom. And that was great. I really appreciate you giving us some background there. And I'd say your background and my background are similar. I had no rich uncle. Sounds like you didn't either, right? And definitely, had a relatively poor, upbringing as well. Wasn't really handed, anything. Just kind of had to go, figure it out and do it on my own. And speaking of identity, I tried all kinds of different things to kind of, establish my identity, as a junior high and high schooler and college student, and eventually kind of found my way into, the busy professional, world and realm. But the one thing that we do obviously have that's not common is I was not a professional football player, but I certainly know a lot of athletes, over my life, and they all kind of get to a point, in their athletic career where it all of a sudden just ends, right?
Mm.
It's very few people, that really make it to that point where, they've reached the pinnacle of their game and they stay there for decades on end, right? That's very uncommon for that to happen. And I, as a youth coach, with youth hockey and lacrosse and some other sports that my kids are involved with, I see far too many of those children's identities being defined in the sports or the athletics
Mm.
that they're in and
Yep.
not in something outside of that. And so my question for them is always to challenge them, what's next? What's next? Because eventually it ends, right? It just does for everybody. And the truth of the matter is it's very, very difficult for somebody to reach that professional status, in their athletic, let alone make it a career over the course of a decade or longer. Make sense?
Yeah. And I have something to add to that in regards to not just athletes, just people in general. And so through my time of athletics and then transitioning, I started to reflect and I started having conversations with a lot of other people as well. I realized it wasn't just athletes that are going through this same type of transition with their identity being ripped from them and having to do something different. You could be a mom that's an empty nester, someone who retires, someone who's in the military, someone who's in jail. Like there's a lot of different people that have this identity in this thing, and then their life changes, gets flipped upside down, and then they now have to find that new thing. And so I have a saying now that I say is, do not ever put your identity in anything that can be ripped away from you. And so for me, the only thing in my life that can ever be ripped from me is my relationship with Christ. So that's now where my identity lies, knowing that regardless of what happens in my life, family passes, I get sick, cancer, lose job, whatever the scenario is, I will always be okay because my identity is the thing that holds me strong, that can't ever be pulled away from me.
Yeah, and that's a sigh of relief. It's a breath of fresh air. It's comforting to know that your identity is found in Christ and Christ alone, and not through the material things of this earth, which rot and fade and drift away, kind of a thing. So, really
Yep.
appreciate you sharing that with me, Dom. I do want to unpack a little bit more about this topic of whole life insurance, and as I explained before, it's definitely not my forte. So very interested to learn a little bit more, about that. But can you kind of explain for the listening audience, the basic concept of whole life insurance and maybe how it differs from term life insurance?
Yeah. So, on a basics perspective, when I have this conversation with people, I try to make it as simple as possible to something they're used to. And so, just think of term as you're renting, and permanent whole life insurance is something that you own from a house perspective. So, you rent a home, you own a home. When you rent, obviously, you pay a premium. There's nothing that's ever being built up from an equity perspective. And then at some point, it's just the money's gone. And so, that's term. And then when we look at the permanent side and whole life, it is a contract that when you pay into it, equity gets built into it, and then you have the ability to access the cash. And at some point in time when you die, you will always have a permanent death benefit your entire life that when you die will get passed down to somebody or something. And in the term side, it's only a 10, 20, 30 years usually. And then after that, you will likely outlive it just due to the statistics that the insurance companies have already built in.
Yeah, that makes sense. So if I'm hearing you correctly, and please correct me if I'm on here or not, there's this concept of control with maybe a term life insurance policy. The investor really doesn't have control. Whereas with a whole life insurance policy, there is an element of control with the investor in terms of where those funds are used or allocated.
Yeah, and I guess we'd have to define what you meant by control and what I mean by control. And so when I use the word and define control, I always use it in the words of I have the ability to use it how I would like to for something else. And so when I pay premiums in the term contract, the money's just gone. So obviously I have no control over capital. But when I have something like a bank account, like, yeah, I have control over the money because it's easy, it's accessible, it's liquid. If you put money into a 401k, you no longer have control, right? You don't know how the stock is going to perform. You can't access it till it's 59 and a half. And it's essentially locked up and tied away. So therefore, I have no control over it. And so inside of whole life insurance, you have complete control like a bank account, but there's other asset activities that come with it that are very advantageous to a real estate investor or business owner.
Am I correct in saying this, that with a whole life insurance policy, I can use the funds in that policy to invest into real estate?
That is correct. And that is the funny thing that most people don't realize when they even get set up with whole life insurance and just permanent insurance in general is that they come to a typical financial advisor, whether it's Northwestern Mutual, New York, like some, boutique financial firm, great financial planning, et cetera, et cetera. They get set up with whole life and then they're set up for death benefit purposes only. Like that was their objective. And then they have a conversation with myself, somebody else, and they're like 8 years later, they didn't even know that they could use the money that's in there. They just forgot that it was there. And so what we do is we kind of do the opposite is we're really having conversations with people and not about death benefit focused, but cash accumulation focused. And so we design it in a specific way that's different than typical financial planning. By doing so, it makes it super cash rich, super cash heavy. And then our focus is to use those funds for actually activities that create opportunities in our life. And a lot of times it just happens to be for someone who does real estate or business, et cetera.
So, can you explain this to me? How does the cash value component and dividends work within a whole life insurance policy?
It's a great question. And so there's two sides to it. There's a guaranteed side and then a non-guaranteed side. And so contractually guaranteed, as long as you make your premium payments, the insurance contract will grow over your entirety of your life. Then there's a dividend component that's in the non-guaranteed side of it that you get added to your contract with the guaranteed side. Now, the insurance companies that we always use have been around for hundreds plus years, have never, ever, ever missed a dividend payment, but they're not technically quote unquote guaranteed, but they're as close as the guaranteed as they possibly can be. At the end of the year, based on the company's profits, you now get a dividend back to you because you are a owner of the insurance carrier when you have a whole life insurance contract with a mutual carrier. It's got to be mutual. If you use a stock company, a stock carrier, you won't get a dividend. So you have to be very specific in the company you choose, the financials that it has, and that they're designed specifically for this contract. So you can start to see there's a lot of variables and factors that get put into it to design a contract in the way that we do. Someone has to know how to design it. They have to know that this is possible. They have to pick the right company, and they have to have all of these factors that essentially make a great, rich whole life contract. Because if you don't, then you essentially get the bad rap that other people like Dave Ramsey or people that just maybe don't understand this side of things, maybe just naturally think about.
So let's talk about some of the facts and figures here. And I'm not going to hold you to your answers from a crystal ball, perspective, but what's the typical amounts that you would see somebody, deploying into, is there a minimum requirement in terms of what that investment looks like? Are the dividends that they receive, are those taxable and subject to capital gains taxes, understanding that we're not CPAs here, right? And then, what do some of those returns typically look like for the investor?
Yeah, those are all fantastic questions. And so when it comes to the amount of contribution, it really is going to depend on per person and their goals. What I usually like to tell people is say, hey, where are you putting your money at for an investment opportunity? So anything above your expenses that you're using and setting aside in savings, opportunities, emergencies, that is what we want to redirect into something like this. And so this now becomes your new emergency opportunity fund. So, I mean, we've have clients that will do 500 grand a year, 100 grand a year. And then usually from a minimum perspective, if you're going to invest in like real estate and other opportunities, we usually say, okay, bare minimum, you should probably do 10 grand a year. Anything less than that, it doesn't really become that advantageous, right? If you start to think about someone that's putting in like 3 grand a year into a contract and they want to go do a $50,000 a year syndication deal, it's like, well, you may never have, it may take you a very long time to get the funds in there to actually do what you want to accomplish. And so it's got to make sense. So the first goal is to get cash flow right, get income right, get rid of some of the bad debts, shift money into this, put it in here, use it, put it into real estate, and then so on and so forth. And so that's kind of the answer to your first question. And feel free to stop me at any point in time. In regards to the tax side of things, life insurance has amazing tax advantages. And the reason why is because it's life insurance at its core. So because of it, the death benefit gets paid out tax-free. Now, that's not necessarily the reason why people come to us is the death benefit, but it's great for your family, for protection, pay off debt, pay off the real estate mortgage loan. Like there's a lot of things that it can be used for business owners, et cetera. But when it comes to the actual cash that's growing in it, uh, because we are technically borrowing, and so this is the function that makes this super unique. The IRS looks at this as debt, and debt is not considered taxable. So all of the money that grows, we never have to pay taxes on it. And so we have the ability to use tax-free if it's set up and used properly. So this is why people love it, because now we can shift money into a vehicle that's now growing and compounding. We have control over it, and it's getting these tax advantages and never paying taxes on it. So now we have an asset that's getting these tax advantages. We can use it tax-free, and then we put it into another asset like real estate that has all these other tax advantages to it. And this is how the wealthy continuously keep growing their wealth, is because they remove it from the system, such as retirement accounts, 401ks, savings accounts that are growing and having to pay a tax man at some point in time, and then put it into these types of vehicles that can get tax advantages along the way.
Interesting. So I've heard the terms infinite banking thrown around often. And is that what you're describing here?
It's a very interesting concept that you brought that up, because there's a book that is written by the guy that quoted it, the Nelson Nash Infinite Banking. And I think that marketing has really done a terrible job of doing it justice. And what I mean by that is, too often people are now talking about infinite banking, about putting money into this contract and then using it to buy vehicles, paying off debt, watches, car. Like there's a lot of things that people are using their whole life insurance contract for, and then they deem it as infinite banking. But at its core, I would say that if it's set up and used properly, you could say that it is infinite banking, because really what it is you're borrowing against your whole life contract and using it for a different activity. Now, it just depends on your philosophy of that activity. My philosophy is only using it for assets, only using it for opportunities. I think if you're going to borrow and use it for groceries or other things like that, it's irresponsible, and that's not how you build real wealth. And so, yeah, the coin concept is infinite banking, but I don't like to necessarily associate myself with it, mainly because of the darker side of how other people are using it. But there are really smart people that are talking about it in the appropriate way, that I really do respect in that space.
Yeah, that makes sense. What would you say, Dom, are some of the common misconceptions about whole life insurance that you think people should be made aware of?
I actually think that all of the misconceptions are true. And the reason why I say that is you hear a lot of them are like, it's expensive, the agent gets paid a ton amount, like, buy term, invest, the difference is better. Like you hear those types of common objections. And what I will say to that is, if you put whole life into one bucket as a whole, what typical whole life does is all of that. It is expensive, right? It costs a lot. You have no cash value. Like there's contracts that you can design where you put 100 grand into the contract. The very first year you have $0 to use. The second year you put in another 100 grand, you have $0 to use. By the third year you put 100 grand in, you finally have maybe $20,000. You put in 300 grand and have $20,000 of actual liquidity to use. And your death benefit is astronomically large. Therefore, the agent is also going to get paid a ton of money, because the commissions / the cash value can only go one way. Either the agent's going to make a lot of money, or the cash value is going to be higher, right? So if the cash value is lower, the agent makes more. So it's either one or the other. And so when it comes to the misconceptions, I would say if it's designed like typical whole life insurance, everybody that talks about the misconceptions are correct. If it's designed properly in a specific way, I would say the misconceptions are all of the things that people think that it is, because it's not when it's set up and used properly in the right context.
Yeah, that makes sense. Now, who do you think who would be your ideal investor in whole life insurance, in terms of their financial planning and financial trajectory? Really, who is it for versus who maybe it's not really a good fit for?
Yeah, that's a great question. And I'm only going to just change the terminology that you use because I want to make it very specific on what this really is. Use the words invest. Who would be good to invest into this to? I want to make sure that we understand that whole life insurance isn't an investment by any means. It actually is like a replacement in my mind of more of like a line of credit or a bank account, right? We never would we say, hey, like your bank account's an investment or your line of credit's an investment. It really is a storage of capital to be able to borrow against and use for actual the investment piece of it. And so, with that being said, who's the ideal person? Well, it's anybody who is a value creator, anybody who has the mindset of growth, wanting to build wealth, that understands how to use capital appropriately. When you're using leverage, you obviously have to know how to use leverage. And really, when you borrow against your policy, there is leverage that's being used. There is a control cost, so an interest rate that's attached to that to be able to use for another activity. And so it's got to be for a select few person that understands how this works, that is a entrepreneur, value creator, business owner, that understands leverage, and that has a family is a bonus because now they actually care about where the death benefit goes to at the same time. And they have to have cash flow as well. Like if you're strapped for cash and you don't have any money, well, then obviously you can't put money into the contract. So
Yeah, absolutely. Now, what would you say would be some of the potential, drawbacks, right? I'm thinking about those people that, maybe they like to have plenty of dry powder sitting in a bank account getting 4.5% interest right now. What would be some of the potential drawbacks or disadvantages of choosing, whole life insurance policy versus, just keeping that money liquid in a money market account?
yeah, so the drawbacks would be the speed of accessibility. So like in a bank, like you could literally go 15 minutes, if not seconds, depending on how you're using the money to have access to it. When it comes to a whole life contract, it can take anywhere from 24 hours to 5 days to actually access the funds. And so if you're somebody who is like really active from like a trader perspective, right, it could be very challenging, right? It's like, well, the market's down one day and then 2 days later, the market's like already recovered. And so for that, that becomes a super big challenge. But if you know you already have an opportunity down the road and it's coming up, you're doing your due diligence, you look at the memorandum, like you're doing all of these things and you know, like, hey, here's closing. Well, you have plenty of time to request a loan because it's only 24 hours to 5 days. So it really depends there. Um, Another thing that would be disadvantageous is you don't have dollar for dollar access at the very beginning. So if I were to put 100 grand into the contract, depending on the company is with and how it's designed, you may only have access to about 70 to 80%, sometimes 92%, depending on how it's set up. So we can say anywhere from 70 to 92% of that 100 grand to use within the 30 days. So you kind of are taking a little bit of a hit on the amount of money that you can access right away. So when we're looking at this from a mindset perspective, this isn't something that's like a short term, quick magic bullet. This is somebody that wants liquidity, a line of credit to grow over time that compounds, that they can have access to for the long future. So upfront, you're going to be better off just putting your money into real estate. That's just completely honest. Like you would be, but 5, 6, 7, 8, 10 years from now, you'll have access to more capital and liquidity as time goes on, and you'll be able to buy more real estate for the future. And you also have a permanent death benefit that you'll have for your family and don't need to buy term insurance, and it gives you the opportunity to spend down all of your assets today, knowing you have a large lump sum of money to go down as a legacy piece to the people you love.
Yeah, absolutely. It sounds to me like it's more of a long-term type, investment strategy, not something that, you're going to get into and get out of, over a short period of time, but it takes time to build up.
Yeah, it's something that you want forever. It just becomes part of your toolkit at the end of the day. Like, you have lines of credit from your bank, you have lines of credit from your business. So you can get a line of credit from your home, right? Of a HELOC. This really just becomes a new line of credit, but that's guaranteed to grow, right? Every year your line of credit doesn't grow. Sometimes your home can cut in half and that line of credit can get cut down. This is guaranteed to continuously always grow and increase, which gives you more opportunities to buy more real estate. And this is where I always like to tell people is the best time to buy real estate is when the market and every other activity is essentially on sale and fire sale, right? Usually all asset classes, a lot of times they crash together and they rise together. There's one asset class, which is insurance. Obviously you have some of the other fixed stuff, but just in general, you have this asset class of whole life that never goes down. So as all of your other stuff is going down and is on discount, like you have a 2008, you have a COVID, you have whatever the case is, it is still growing, which gives you more access to more dry powder to then borrow to use for these other things when they're on discount. And then when those things rise, you can then sell, take the cash flow, and then put it back into your policy. And you just rinse and repeat that over and over.
Yeah, no, that's great. It's good diversification play for sure. If I was an investor wanting to learn more, would there be any particular book recommendation out there that you might have for the listening audience?
So selfish plug. There's a book on regards to this concept specifically. It's called The And Asset. My partner wrote it. Great book. It gives you really good idea of how this can functionally work. We wrote it 5 or 6 years ago, and so it needs to be updated a little bit, but it's super easy, a little over 100 pages. People can usually they read it in about a day or two, and there's lots of great feedback in regards to like, oh, I want this, what we call the master account within it. But I think it does a really good job of explaining this at a high level.
That's great. Well, what's up next for Dom, either personally or professionally, as we look to enter into the back half of 2024?
It's a great question as well. I have just this really strong desire to just run and operate companies and business. And I'm loving what I'm doing currently at this point in time. And so continue to be the operator of the company that we have, focus and pour into people. I have a really strong desire to just want to help people grow and lead them in a strong way. Really am starting to create content around personal brand on LinkedIn, just sharing some of the experience I have through sports and athletics and running a company. And so just kind of piecing that all together over the next, 2024. And if a great opportunity presents itself as well, and in certain opportunities like real estate, I like crypto as well. So there are some things that I spend a decent amount of time looking at from opportunity perspectives, take advantage of that. But that would say that, yeah, just focus on business and growing and being a better version of myself and creating the content that shares a little bit about my past experiences and stories.
That's great. Well, what would be maybe 1 or 2 different ways that our listening audience can connect with you? I know you mentioned LinkedIn would be a good place to connect. I assume you're under Dom Rufran or Dominic Rufran. Are there any other places outside of LinkedIn that would be a good place for us to engage and connect?
I think at this point, there used to be more. And what ended up happening was I decided to narrow my focus in quite a bit. And I wanted to grow myself, business, and stay focused on what was important. And so because of that, I'd say LinkedIn right now is the best place. So Dom Rufran, Rufran, great place to connect. DM me. You could even email me, dom@betterwealth.com, if you want to connect as well. But yeah, those are probably just the 2 best ways for us to connect and build future relationships, which I'm always all about.
Yeah, sounds good. Well, we'll definitely put that information in the show notes for the audience. Dom, really appreciated having you join us on the show today.
Yeah, it's fun to be here at the Freedom Point podcast. So thanks, man. I had a great time.
Yeah, sounds good. And listening audience, thank you again for jumping into another episode of the Freedom Point. We look forward to having you join us on the next episode.
Thank you for hanging out with us today and for listening to the Freedom Point podcast, powered by Starting Point Capital. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decision, please consult with a professional. This show is copyrighted by the Freedom Point podcast. Written permissions must be granted before syndication or rebroadcasting. If you're interested in connecting, you can find contact information at startingpointcapital.com.